figured, I wanted to go over this in class because I figured that there'd be more than one student that would have a question about it. This is regarding the reserve ratio, which your book sort of goes through, not in a whole lot of detail, and we didn't really go through a whole lot in class other than to mention it. But what we need to do is be reminded of, there's a formula for this, right? So reserve amount divided by annual payroll equals our reserve ratio. Okay, so let's kind of be reminded of what the concept is here that we're talking about. The whole idea is that employers have paid in enough money through their contributions to cover unemployment claims. So that is the amount of reserve that they have. So for example, if we have employer one, they've paid $80,000 in contributions over the years, and claims have been $60,000. Then their reserve is $20,000. Okay, so they get credit for the amounts that they've paid in before. Right now they've got a reserve that is higher than the claims that have been paid, right? So however much is in their reserve, kind of their own little account, right? There is the tax rate or the contribution rate that is established, and these ranges would vary from state to state. You apply the reserve ratio, once you've done the calculation, the reserve ratio in this particular problem then corresponds to a contribution rate. That's their tax rate. Okay, so that would be the rate that would show up. Did I already exit here? Yeah, sort of did. It's not the one I want. Let's see. So here they're calling it their state experience rate, but this would also be the contribution rate. Think of it in terms of a tax rate, right? So in this problem, they've given us the reserve, the table to determine, okay, if we have a reserve ratio that is between these amounts, then this is going to be our contribution rate. So for example, if our reserve is, well, let's say we got 20,000, and our annual payroll is, let's just say $1 million. $1 million. We do the math on that. .02 is our reserve ratio, or 2%, right? Also known as 2%. So, in that case, we would look at the table, 2%. So 2% or more, but less than 2.2%, means we would have a contribution rate of 4.9%. Okay? So this formula here is what you need to use, and you're going to need to use it with, there are a couple of more advanced problems here, and I'll go through this with you. But you're going to use the same formula, but, well, you'll see the unknown. In this case, our unknown was the reserve ratio. Our unknown could also be the reserve. If we had the annual payroll and the reserve ratio, then we could figure out what the reserve needs to be, right? Okay, so let's look at these first. So here we've got a hiring company located in state A. Get rid of these things here. Okay, so a hiring company located in state A had an average annual payroll of $850,000 for the 3 12-month periods ending on June 30th, 2021. Okay, so that's our average annual payroll. So we've got the denominator here, 850. As of June 30th, 2021, the total contributions that had been made to their reserve account in excess of the benefits charged was $17,440. All right, so our reserve, $17,440. Use that to figure out what the reserve ratio is. Divided by 850. 0.02105. Luckily the table says more than 2. 2% or more, but less than 2.2%. All right, so we're at 2.05%, essentially. We can apply that to the table. It's 4.9%. This is our reserve ratio, and this is our contribution rate. So here they want our reserve ratio. Probably just want to round it to 2 decimal places. 0.02. Okay, 2.0. They want the 0.05? There we go. I guess they do want the 0.05. 2022 contribution rate is 4.9. Round it to 1 decimal place. Okay. Okay, now we get a little bit trickier. The smallest contribution that the company can make in order to reduce its tax rate if state A permits voluntary contributions. So remember, we've got states, certain states that will allow companies to contribute to this numerator in order to bring this amount and ultimately this amount down. Actually brings this amount up and this amount down. It reduces their tax rate. So, in order to determine how to do that, do this. I'm gonna make this just a little bit smaller. Sorry, I know that might be. Yeah, I don't like doing that. Let's see. I want to be able to see both. Maybe that's better. Okay, smallest contribution that the company can make in order to reduce its tax rate. Okay, so they don't say how much they want to reduce it by, right? It would have been nice if they actually said that. But what they're talking about is going then from the 4.9% down to 4.6%. Now, in order to do that, the 4.6, their contribution rate or their reserve ratio has to be at least 2.2%. So what we're going to do here to determine this, so we're going to, we can plug these numbers in to figure out what we want. So we want a reserve ratio of 2.2%. Okay. We don't know, let's see, we don't know what the reserve has to be. Remember, it's going to be whatever that 17,440 plus something, right? What we're looking for is X here. How much extra we need to pay. And we don't know what Y is so let's use our formula here. We don't know what the numerator is, but we do know what the denominator is. It's 850,000. Right? Now we just solve for x. Think back to your math class, your algebra classes, right? We're going to multiply both sides by 850,000 to solve for x. Okay, so 850 times 0.022, 18,700. Okay, so in order to get to the 2.2%, our reserve has to be 18,700. Right now, what is our reserve? Oh, covered up here. How much have they got in their reserve? They gave it to us. 17,440, right? They currently have 17,440 in their reserve. They want to have 18,700 in their reserve. All right, so how much? They need to make an additional payment of the difference between those two. By making an additional payment of $1,260, adding that to what they had in reserve already, the 17,440, that brings their reserve up to 18,700. Right? So 18,700 gets them to a 2.2% reserve ratio, which gets them onto this line of 4.6% for their contribution rate rather than 4.9%. So they make an additional payment of the $1,260. That's the smallest amount of payment that they can make, is $1,260. Now what they want you to do, well, first off, any questions about that calculation? There's several steps to it. And you kind of have to arrive at it backwards. But this is, if you know this formula, you can plug it in and solve for it. No questions? I doubt that, but. All right. So, this last part, tax savings realized by the company, taking into consideration the voluntary contribution made if the taxable payroll in 2022 is $980,000. Okay, what they're asking here is, all right, so we've made this additional payment, is it worth it? That's going to reduce our contribution rate from 4.9% to 4.6%, so presumably it's going to help, right? It's essentially reduced our tax rate. But which is going to reduce the amount that we have to pay, but is it worth it? We're looking at a cost-benefit analysis in this last problem. So now what we have to do is figure out how much did they save? Right? All right, so if their taxable payroll in 2022 is 908, did they use 2021 for the rest of these? I guess they did. So now we're looking at, okay, if we hadn't made that additional payment, let's figure out what our tax would be with a payroll of $980,000. So let's just say we didn't do this, we didn't make this additional payment. How much would our tax be? So we were at 4.9%, right? So 980,000 times 4.9%. $48,020. Okay, this is what, if we had not made that additional payment, reducing our contribution rate, this is how much we'd be paying in tax, or in, well, I know, I think of it in terms of tax, but in contributions to the fund. Now, in this scenario, it's 80, we did make that contribution, 0.6%. Let's see what the tax is here. $45,080. All right. The difference between those two is our tax savings. So 48,020 minus 45,080, 2940. $2940 is our tax savings. So it cost us $1,260. This was our extra payment, right? To the reserve fund. It cost us $1,260, but we saved $2,940. So the difference, and what the problem is asking, what are the tax savings realized? It's going to be the difference between those two. So $1,260 was our cost. This was our tax savings. So $1,680. We saved our total savings was $1,680. Several steps to that, not real cut and dried, and yeah, it's, you know, I don't think your book didn't present it that way. You have to really kind of think through all of these steps. Questions? Does that help? Yeah.
Can you do 56 box 4?
56. Box 4. This one here? All right. Let's see. So, 0.6%. Okay. Information is from the Monica Company for the year ended December 31st. Wages are separated into the quarters in which they were paid. All right. So, State D's contribution rate was 2.8% of the first 7,000 of each employee's earnings. Well, that's thankful that they use the same tax base there, right? State tax returns are due 1 month after the end of each calendar quarter. Company paid $22,1480 of contributions to State D's unemployment fund. President of the company prepares and signs all tax returns. All right, then we get that using the form below. Complete the following. All right. So, what is the date and amount of the FUTA tax payment for the fourth quarter? So this one we would have to determine. So these are the total wages when they may. Okay, so you've got that part, right? The when it would need to be made. Okay, and you've got the FUTA amount. Okay. Okay, so gross wages. 385,600.
Gross wages got correct at 98.
Oh, and this is for the, I'm sorry, this is for the fourth quarter.
Yeah,
Sorry. I was looking at the total. So 98,100. All right. Employee contributions, none. Taxable wages for employer contributions. So we need to figure out of these $98,100, how much was subject to pseudotax? Right? Okay, so we have to do, and probably the best way to do this is maybe put together a spreadsheet and enter all of that information in. Once they get to that 7,000 or over that 7,000, then that's when none of those wages would be taxable. So let's look at, we'll just take, instead of putting together a spreadsheet, let's just take it employee by employee here. So Robert Kramer, if this is the fourth quarter, correct? He'd already reached that $7,000, right? He reached that in the second quarter. So how much of his fourth quarter wages would be subject to pseudotaxes? None. Okay. So, and this is, taxable wages. Daniel English, same thing, right? None of his wages in the fourth quarter would be subject to pseudotaxes because he's already reached the 7,000. He reached that in the first quarter. Ruth Small, okay. Now, Ruth, however, she made $2,000, $2,300, $2,300, and $2,400. So all together, for the full year, well, I guess they've got the total here, don't they? She's made $9,000. So how much of the wages that she was paid in the fourth quarter was still under the $7,000 wage base? So 2,000, right? She had a total of $9,000 that she was paid. No, 400. So if you look at a couple different ways you could do this. So 2,000 for the first quarter, 2,300 for the second quarter, third quarter, 2,300. She's only got $400 more to go. Okay. So 400 of that 2,400 was subject to pseudotax. Let me get another calculator up here. All right, so we'll keep a running tally. So $400 so far of our wages. Next employee, Harry Klaus, again, he's already reached it. None of his wages would be subject. Kenneth George, again, none of his wages would be subject to the taxation or the unemployment tax. Mavis Jones, she didn't make anything in the fourth quarter, so none of her wages would be subject because she didn't have any wages. Marshall McCoy, same thing. Bertram Gompers made, his 7,000 was absorbed in the very first quarter. Arthur Rooks, he hasn't gotten up to the $7,000, right? He hasn't reached $7,000 in total wages. So all of that 1,700 would be subject to state unemployment. Mary Bastian, again, she's already exceeded the 7,000 in the first quarter. Klaus Werner. All right, now let's look at Klaus. We're going to look at him the same way we looked at Ruth here. So he made 2,300 plus 2,500 plus 2,500. Okay, so in the third quarter, he reached the 7,000. So none of his wages would be subject to pseudotax. Same thing for Kathy. Even though she just got hired in the third quarter, she made more than $7,000 in that quarter. Okay, so in total, we have $2,100 that are subject to pseudotax. Where's the check my work? So that's the amount in that fourth quarter that is subject to state unemployment tax. And you would multiply it by the tax rate, which is 2.8%. it's a matter of figuring out, you've gotta look at how much has been paid prior to this quarter for each employee. Questions? Okay, any other problems you want me to take a look at? Yeah, go ahead. Can you speak a little bit louder?
Number 50.
C, D, and E. Okay. So let's see here. How much per month? Engaged in operating, which include $1,500 a month. Okay. Paid a weekly salary allowance of $950. Doll shop is located in a state that requires an employee conversation. One or more individuals, company is subject to state contributions rate of 3.1% for wages not in excess of 8,100. Upon the 41st weekly payroll period, okay. State unemployment contributions for the weekly payroll for a year. So, only wanting it for, oh, this is how much they're paid every week, but this is, gotcha. How much they're paid. Okay, so we've got to figure out how much they've made so far this year. So $1,700, and this is the 41st week, 41st weekly payroll. So again, we're gonna look at each individual employee here. We gotta do some math. So if Hoffman is making $1,700 a month, right, times 12 months, 20,400 divided by 52 weeks, 392.31 a week, times, this is the 41st week, he's already made $16,084, he's over the $7,000 threshold and over the $8,100 threshold. So none of the wages for Hoffman would be included in the calculation. Drugan, $15,000 a year, divided by 52 weeks. Whoops, something's wrong there. 15,000 divided by 52 weeks, 288. This is the 41st week, 11,826. Same thing, over the $8,100 threshold. All right, $180 a week times 41 weeks. Okay, now, biter. So in the 41st week, that $180 that they've made would not be subject to FUTA tax, but it would be subject to SUTA tax, wouldn't it? Because he hasn't reached the 8,100 yet. That 8,100 base amount. So all of it would be subject to SUTA tax. Okay, so there's one, so 180. Put that one aside. All right, S. Egan times 41, so 9,020. Now, as of the last pay period, 40 pays, he's reached the 8,800. Again, he's over the wage base. So we don't have to worry about the delivery man. And then Lynn, 160 times 41. All right, so Lynn, and are they looking for state unemployment contributions? Okay. So for Lynn, that whole $160 is going to be subject to both FUTA and SUTA taxes. All right, so now we've got 160. So 340. Then we got Grady and Monroe are each paid a weekly salary allowance of $950. Well, they're well over the $8,100, right? Okay, so $340 is going to be subject to state unemployment tax for this payroll. So 340, and it's a 3.1%, 1054. Let's see if I'm right. Yeah. All right, then you have to do the same thing for FUTA. Right, how much of it is subject to FUTA tax? But again, the tax rate's gonna be different. So the only ones we might have to worry about with regard to FUTA tax is, let's see, 180 times 40 was 72. Okay, so Beater, they're over the 700, they're 7,000 already. Egan is already over it. The only one is Lynn. So up to this pay period, 6,400 are the Lynn's year-to-date earnings. So all of this 160 is going to be subject to FUTA tax times 0.006, 96 cents. There we go. And then the total amount of the employer's payroll taxes, you're just going to take, for the weekly payroll, you're going to take these amounts plus these amounts. So whatever you figured for the FICA taxes here, for the employer's payroll taxes, you're just going to add those amounts plus these two amounts. Does that help? That answer your question? Okay. All right. Got like 3 more minutes. Other questions? No? All right. Well, you know where to find me. If you have other questions. So again, on Thursday, we're going to start on chapter 6, the final frontier. So if you can, try and get started on that. Your homework for this chapter isn't due, when is it due here? For chapter 5 is due, you've got time to do your chapter 5 assignments, not due until the 22nd. So you got plenty of time to work on those. Oh, that's next week.